Be Wealthy and Smart, episode 1635.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about inflation is moderating and why that matters, and what it portends for interest rates. So today, the Consumer Price Index numbers came in at a 12-month inflation rate of 2.4%, according to the Bureau of Labor Statistics, or BLS, and that matched the Dow Jones Consensus Forecast. Consumer prices were up 0.3% for the month. If you take out volatile food and energy prices, the core CPI posted a 0.2% monthly reading and 2.5% annual rate, compared with forecasts for 0.2%, so right on target with the forecast, and 2.5% annually, also in line with the forecast. The annual rates were unchanged from January, indicating that inflation was holding above the Federal Reserve's 2% target rate, but not getting worse. While the report showed inflation broadly stable, prices rose modestly for shelter and services, while several goods categories, including used vehicles and auto insurance, actually saw price declines. The Consumer Price Index has dropped sharply since 2022, when it hit almost 9%, so being at 2.5% now is substantially improved. The single biggest component of the CPI, which is shelter, posted a 0.2% increase, which is annually a 3% rate. Within the category, rent rose just 0.1%, which was the smallest monthly increase since January of 2021. Apparel prices saw a 1.3% monthly gain, which was the biggest jump since September of 2018, which is not surprising since they're sensitive to tariff pressures. New vehicle prices were steady and up just 0.5% from a year ago, while energy rose 0.6% and also saw a 0.5% annual increase. Food prices were up 0.4% for the month and were up 3.1% from a year ago, while egg prices fell 3.8% in the month, putting the annual decline in price at 42.1%. Sonu Varghese, chief macro strategist for the Carson Group, said CPI inflation for February was along expectations, but this is the calm before the storm that will show up due to surging gasoline prices in March. Still, this report does show that the Fed has an inflation problem, even if you set aside the energy shock. Tariff impacts are still hitting core goods inflation, while services inflation outside housing remains hot. So as long as inflation remains above the Fed's 2% target rate, it is considered too high, and that makes it difficult for the Fed to reduce interest rates. However, the Fed also considers the jobless rate when making decisions about interest rates, and that number we're expecting to get on Friday. The data we got today predates the recent surge in oil prices tied to the war with Iran, meaning any impact from higher energy costs will likely show up in the months ahead. While crude oil prices have climbed sharply amid fears of supply disruptions in the Middle East, the G7 countries are actually said to be releasing oil from their reserves, which could help to increase supply and drop oil prices. Crude oil prices are well off their highs after briefly rising above 100% a barrel on Monday, but were up about 4% in Wednesday's trading. From the Federal Reserve's perspective, the February CPI report likely keeps the central bank on hold as it watches how a series of interest rate cuts last year, plus the current geopolitical tensions, impacts the economic outlook. Traders expect the next rate reduction to come in September, and we're assigning about a 43% chance of a second move before the end of the year, according to the CME Group's FedWatch tool. Despite fears that tariffs would spur inflation and complicate matters for the Fed, the CPI report shows generally receding costs in goods most impacted by tariffs and rising prices for key services components such as medical care, airline fares, and lodging. The Fed will release its next interest rate decision on March 18th, with traders assigning nearly 100% odds that the central bank will stay on hold. Of course, what isn't mentioned here is, will Kevin Warsh replace Fed Chairman Powell, whose term is up in May? Warsh is said to be a proponent of much lower interest rates. So even with inflation trending a little bit hot, that's the one factor that could change where interest rate expectations are today. So we'll continue to follow the story and report back to you as it unfolds. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.